Once again, hello everyone. You are welcome to my YouTube channel. It's your boy Joshua, the disciplined trader. So last week, when I posted my last video talking about supply and demand, how to identify and mark supply and demand zone, I promised you guys that I'll be teaching market structure, how supply flips to demand, or how the market changes the trend from uptrend to downtrend. So in this video, this is what I will be explaining, and at the end of this video, I will give something you guys will definitely take home, and you will understand the complete market and or how the market actually works, both using different types of time frames to analyze your chart so you can get the best top-down analysis and the best way to enter for a trade. So watch this video to the end for you to have it. So what we are seeing here is the market trend. Price doesn't move up straight away, or price doesn't move down straight away, because price is like a car moving, and a car is not going to continuously moving towards its direction. At a certain point, a car will definitely stop, either to drop a passenger or to get a fuel for its tank. So this is how price actually move in the market. As you can see the first scenario right here, you can see that price is going up. This is called the uptrend. Please guys, do well to have your pen and book so you can be able to write something down, because this is very important to know for the basics, especially for beginners. It's very important. So what we are seeing here, right here, is the uptrend when price keep going higher highs and higher lows, higher high and higher low. Now let me explain the uptrend. First of all, we have the uptrend, which is this one, and we have the consolidation, which is this one, also this one, and we have the downtrend. These are the three types of trend we have in the forex market. There is no other trend when it comes to forex or any other financial markets having charts. So we have the downtrend, we have the consolidation, also known as the ranging market, while we have the uptrend. So talking about our uptrend, when you see price creating these highs, then it fall back, then it broke past this higher high right here, which I've put this higher high. This high is called the higher high because why? It's higher than the previous one. If you look at these other higher highs, why it's called the higher high is because it's higher than this previous point that price broke past it, and this is the lower low. Why this one is called the lower low is because it's lower than this other one. So the more price goes up, it keeps on creating the higher highs and higher lows. Higher highs is when price go up, and higher lows when price will come down but not breaking past the previous point. It leads to price breaking this higher high. I hope this is very I hope I'm not complicating things right here. So in case you don't understand, please comment on the comment section what part you don't understand. So once price break this high that pull back, it will become a higher high. At first, let me give you some example right here. So what we are saying is price went up. This has not become a higher high, except it pulled back. It pulled back. Now structure is about to form. Structure has not formed yet, but it is about to form. Then price went up. Now structure has been formed when it comes to market structure, which is this is the high. Price was here, then went up and created a high, then came down. This is called the pullback. Remember I told that I told you guys that once car is moving, it's not going to move continuously to its destination, but it's going to stop to get a fuel for its tank. So a car stopping to get a fuel for its tank, if you relate it to the forest market, is when price actually pull down, taking a rest before going up. Now price has taken its rest, or in the definition or the illustration of a car I gave, price have actually get a fuel for its tank, then continue the move. Now this move actually led to price breaking this point right here. This is called break of structure. Now a trend has been formed. So we have these higher highs, higher low, and another higher high have not been formed yet. Take note, until price actually went come down again, then break past this previous high, then we can say a structure has been formed again. Then we can take our line tool and mark from where price pull back to from where price pull down. We mark the top for where price pull down. Or the simplest way is when you see price actually the simplest way for you to know is if you see price going up, then once you see price coming down, once you see price coming down like this, just put your tool right there or just mark from this top, then take it straight. Then immediately as price break past it, just know a structure has been formed. We now have our higher highs and our higher low. So price will continue to give us another higher low and higher highs, another higher low and higher high. Price will continue to give us a new break of structure, a new break of structure right here. So this is how the uptrend actually works when it comes to the forex market. As you can see, this break is called the break of structure. Now coming to our consolidation market, which is ranging market. This trend is actually not it's not guaranteed for a beginner trader to trade it when you see price actually going up and down and not creating either higher highs or higher lows. So price actually have a bouncy point and a falling point. So this is what I mean. Price is actually not going anywhere. Otherwise, sometimes you see some market actually not going anywhere, just creating a confusive move. You cannot even identify the higher high and higher low. For a moment, you see price creating a higher high, while for a moment, instead of it to create a higher low and continue the move up, it will come down again, then give you a lower low. Then instead of it to create another lower high or lower low, it will continue going up like this. So the market is so confusing. It's not guaranteed to trade it. It's not advisable to trade it as a beginner, except you have mastered the market or you have a perfect strategy that is working for this type of trend in the market. I will advise you to just stick to this normal uptrend market and the downtrend market. So I'm not going to talk much about this because it's not actually important. So it's important though, but it's not something we are trading as a beginner trader. So we have the price will come down, it will bounce off, then it will fall again, we bounce off again, fall again, bounce off, fall again, bounce off. So it's actually not going above this range and or below this range. It's just stuck going up and down, going up and down. It's just like I'll say a busy market where a lot of market men trying to argue for something. They are arguing for something, just like when they say two captains cannot lead a ship. So this is what is happening here. Talking about the psychology of pride, this is what is happening here. So I don't want to go deep about it in this video. So looking at the downtrend, it's still the same scenario I gave on the higher or the uptrend market where price came down, giving us a lower low, but it has not been recognized as a lower low. Then it went up, taking a break, which is having to take a fuel for its tank before continue the move. Okay, so it has break. It has given us break of structure. This side, this part is now known as a lower low. Price will come down again, give us a lower high. Now, why this high is called the lower high is because it's lower than this one. And why this one is called another lower high is because the previous one right here is actually higher and this one is lower. This one is lower, which means price keeps on coming down just like this. Coming price will keep on coming down just like this, creating lower prices because it is a downtrend. So now this is actually what what I have known. This is the basics of market structure. There is no need to complicate things. There's no need to explain some baby grammars for you here. This is the exact thing you need to know when it comes to market structure. We have the uptrend right here. We have the ranging market, which is not actually guaranteed as a beginner trader to trade. And we have the downtrend. In an uptrend, price will keep on creating higher highs and higher lows, higher highs and higher lows. In a downtrend, price will keep on creating lower highs and lower lows, lower highs and lower lows. Why price actually for a downtrend, why price actually come down? Let me give you another scenario so you can understand more. Let me clean this first. Okay. So another explanation why price actually move the way it move, it is because for price actually move with intention, and the higher the price go, the I'll say it becomes more expensive. It becomes more expensive for people to buy. It's just like an auction. The more the auction, the more the price will continue going up. So price went up like this, keep on going up, then it become expensive. Then for people to have more interest on price again, or to keep on buying the stock or buying whatever pair you are actually in, price will definitely fall down again for it to be cheaper. We are actually retail traders and we actually don't have any interest concerning this stuff because we are not trading the market directly. We are actually using brokers. So price will come down to be cheaper again for the big banks to buy once more, and it will go up again. Now, immediately it broke past this high, it has become expensive again. So they will bring it down again for it to be cheaper before they take it up again to a expensive price or a higher price. The same goes to the downtrend where price become actually cheaper, then they will take it up again, then they'll bring it down again. It's just the same thing. Whether in a uptrend or in a downtrend, this is the same scenario. So price is actually expensive again, then they'll take it up to be cheaper before they bring it down once more. This is why we have the consolidation zone right here, because price is neither cheap nor expensive. Price is either cheap, not expensive. Price is either cheap, not expensive. It's like something in a supermarket that is actually not attractive, or it's just there, it has just been there for a long time, people don't have any interest to buy it. So why will you want to trade a market that is actually not giving you anything, though it gives some people profit, but like I said, don't trade it if you don't have a perfect and you don't have not mastered the market. Yeah, so this is what I have concerning our market structure right here. Once again, guys, we have the uptrend, we have the ranging zone, or the consolidation, and we have the downtrend.